about how that regulatory framework has been done in this country. I'll stop there.
Okay. Dr. Zukri, how is what I believe is the largest Islamic financial platform in Malaysia been holding up in these turbulent times, and how's the water look going ahead? How's the sailing?
Thank you, Mr. Thomas. I think I would like to start with what the impacts of the so-called global crisis to the Islamic capital markets. I think to me it's a blessing in disguise. Now people around the world see that the conventional banking is not prudent and not as transparent, especially in the areas of securitization. So I think in this respect, more or less, this landscape has changed a bit. The mentality of the investors out there, I think investors are a bit more sort of the appetite, the risk appetite has now been changed. They're not looking at back to basic credits. I mean, people are still looking at the takeouts, the clear takeout source. People are now looking at the fundamentals. So with this, I think in the Malaysian context, we see more and more investors are now, because of the current situation, are looking at the alternative ways of raising finance. I think of late we will see quite a number of investors. I think we have one highway concession companies, we have a IPP companies who is now going at the so-called the traditional market. I mean, using so-called the Islamic syndication rather than the sukuk market. This is so because, as I said just now, that the investors' appetite has changed. They are looking more at AAA credits or sovereign risk. But having said that, I would like to conclude by saying that the future for the sukuk market is still very bright. And I think the Standard & Poor's estimate that, there are about more than $45 billion sukuk market actually in the pipeline.
That really leads me to two distinctive thoughts, and perhaps the different panelists can share your views on these, on the capital markets expansion. The first of these would be the broad regional liberalization here in Asia, where we have domestic liberalization enhanced here in Malaysia. We have the new framework in Indonesia. We have the Singapore Sukuk, which represents a development in their framework as well, and perhaps even Thailand will come on board within the next year or two. So we have this liberalization occurring. We have Saudi Arabia now making things a little easier on the Sukuk front. So what more do we need to have a stronger Islamic capital market? Are we getting enough from our regulators and change in regulation? Is there going to be more cloning of the Malaysian model, if you like? Let me throw it out to you all there.
Well, if I would like to start again, as I said, one of these called the challenges that's facing the current Islamic finance, basically the lack of clarity in legal and the judicial system. For example, a case in point, just like Malaysia, even though we have the Islamic Banking Act, we have the Takaful Act, but still this is not considered as so-called Islamic law insofar as the federal constitution is concerned. So whenever there is a dispute, like in the case of BBA, where it is tried at the case of civil court or civil law, and of course we do respect to some of the judges, some of them basically are not familiar with Sharia jurisprudence. So I think the one area that need to be looked at in order for us to take this one step further.
So even with the liberalization, having the right integration of legal systems is a key even here in Malaysia.
Yes.
Badlisyah, any thoughts?
Well, the foundation of an effective Islamic financial market will always be appropriate and effective regulatory framework. And that is what various jurisdictions or regulators in various jurisdictions are currently doing. As you mentioned, Indonesia has come up with the Sukuk law, with the Sharia banking law. Singapore has done various amendments and tweaking to their existing laws to facilitate Islamic finance. Because without doing this kind of legislative or regulatory and guidelines introduction, you cannot have a good industry being done in the market. So that is basic. Secondly, is to approach the development of the industry in the right manner. Of course, whatever reasons you do the industry is fine. You do it because you want to attract GCC petrodollars, or you do it because you want money from rich Arabs and whatever not. Those are fine reasons. But if you want to develop a sustainable, long-term industry, you need to look at it from the most basic need, which is financial inclusion of your population, the need to develop, to ensure that everyone is participating in economic activities in your country. So for regulators, that is the most important basic agenda behind it. It is purely developmental in terms of agenda, nothing else, nothing more. I think those are the two elements that is critical for a successful Islamic finance industry.
Inclusion seems to be what Cagamas is all about. And part of your mandate the last couple of years has included advising people throughout Asia about the general Cagamas model as well as, I think, the Islamic securities model.
I think if I can expand a little bit on the regulatory framework, I think what Dr. Mohammed Nadal said in the beginning is very true. You need to have the standards to have that congruence of the Sharia principles to begin with. And more importantly, you also need a very strong regulatory framework. In the case, Malaysia has a head start because we started with Islamic banking a lot earlier. Although over time we need to adjust to some of the principles and the standards that have been set. Basically, that has given Cagamas a very strong framework when we started to start issuing sukuk. In this regard, I also feel that over time, standardization will also mean wider acceptability of the sukuk that are going to be issued out there. At the moment, I think as we go forward, you find that with standardization, investors begin to understand more. Not that they don't, but of course, being another option or, as what was said earlier, to the investors, they have the right to choose which product, whether it's a sukuk or a conventional bond. But in this case, I think with the framework in place, where there's a better understanding of the product, there will be wider acceptability of it in that sense. Also, I think the jurisdictions around the world are already changing some of their what we call laws and regulations to ensure that the sukuk market will take shape. And I think in this case, people like Indonesia, Singapore to some extent are already starting, and notwithstanding other countries in Europe as well. So back to us, we have been in the business, we have been in the, and actually 50% of our outstanding issuance are in sukuk. So over time, we have actually increased our issuance in sukuk, and we see going forward that will also go a little bit further than where we are at the moment. And of course, this is notwithstanding the fact that we have a strong regulatory framework in place, and notwithstanding the standards that are now being set that we are following strictly to.
Jacques, out in West Asia, we've had a lot of fanfare with the Saudi Consolidated Electricity sukuk and news that Tadawul and CIMB in Saudi Arabia were more sukuk friendly. Broadly speaking, despite some of the challenges we have with some of the corporates and other names in the region, are we likely to see the framework for Islamic capital markets to advance well the rest of this year and into next year? Have we the regulatory framework we need, or we still have some challenges?
Well, I think we don't have big challenges on the regulatory features. Well, in the GCC, we are suffering from the same issues as conventional. I mean, the debt capital market was pretty close. I mean, no investors, and without investors, no sukuk. On top of that, well, IFN made clear what is an acceptable sukuk today. You know that in 2007, end of 2007, we had some issues with the framework of sukuk. It was an acceptable sukuk or not. I mean, Dr. Rashdan was very clear today of what is an acceptable sukuk. So we don't have a lot of issues. Today is more to have investors coming back. We have also to have more issuers. Confidence